This program is brought to you by the Forbes-featured Freedom Hub Health Plan, the alternative to overpriced and restrictive insurance. The Freedom Hub Health Plan is exactly what you need. By Frequency Medicine Associates, supporting health professionals and laypersons with safe and effective advanced telemedicine-like technology that can scan and help rebalance the root causes of stress and illness. By the Planet Lockdown film, which can be seen on the Freedom Hub's Rumble channel along with many great speakers. And by The Pavilion, a 21st century community hub that brings together many of the disruptive innovations featured by the Freedom Hub, including direct pay healthcare, farm-to-table dining, TED-like Freedom Hub talks, and more. Visit your-mp.com/pavilion solution for details. It's Wednesday. Again, we have our Health Biz and Cash Patient, Free Market Cash Patient program. Before Charles introduces our guest, let me give you a little information on our website, where to go to look for upcoming speakers, how to sign up in case things go haywire with our links. So you're going to go to yourmp.com. I will share that screen. And your-mp.com, go to the home tab, and you can come down to webinars, if I can make it work. And you will see both speakers for the coming week, as well as two areas here you can subscribe. And I believe once you're on the list, you stay on the list. So it's a good idea to just sign up and you'll get all of our notifications. And Charlie, you can confirm if people have to still opt in for everyone to get the Zoom or not. I think you do, right? No?
No, once you're in, you're in.
Once you're in, you're in. Good. Okay. So let me stop that and move on to Charlie, my co-host. Actually, the host, I'm more like the sidekick, and he will introduce our program today.
Oh, you're not just a sidekick. Jim, you're the pioneer of Pavilion, the future integrated network that we all crave for primary care to escape the pill pushers. So Wiley is a fellow agent of mine at Empowering Benefits Brokerage. He actually, though, runs his own brokerage, which might be even bigger than MPB, HSA For America, and he's run Medicap Advisors and other ventures over the years and decades. And, you know, here's one question we'll get into later. He's a big believer in tax-advantaged health savings accounts, HSAs, which I recall as a congressional staffer in the early 90s was our counter to Hillary Care, which basically, for folks who don't recall, the best description I ever remember on that fiasco was shoving everyone into an HMO and capping it with Medicare price controls. So it was hiring insurers to take care of the rationing and then just giving them a global budget. ObamaCare was a variation of that with some differences we'll get into. But you know, the thing with HSAs is the theory is by self-insuring for lower level costs and just insuring for catastrophic with the insurance policy, or now sharing, medical cost sharing, you would introduce personal responsibility on the part of the patient, who now would have the proper incentive to either use those tax advantage set aside dollars for out of pocket, or to save it and roll it over every year with interest. Or in the case of current HSA banks that offer them, invest the balances and really appreciate your balance so you can get 100 grand by the time you retire and have that money for long-term care, Medicare gaps, or for a new boat. It's your money. So, you know, we'll get into later how we structure HSA sometimes more as a tax shelter for retirement, and we'll use this new money doubling account for real current out of pocket. So, you know, the innovative agent like Wiley is going to kind of go through that prospect conversation. We have so many tools that certainly would go away if the frustration folks have with insurance would result in further government takeover of our healthcare system. Wiley got a master's in exercise science from Colorado State University. So not only does he believe and HSA to introduce patient responsibility, but he's a big believer in lifestyle. That's not just about perfecting health payment, it's also about upgrading patients and improving their behavior. Twinkies doesn't cut it. In fact, he founded a newsletter for the paleo diet. So we'll have to ask him later if he still believes in that, because all these health experts are arguing, who has the best diet. So we'll let Wiley defend his position. So the big binary dynamic we really want to get into is that licensed health insurance agents like Wiley and me have been increasingly promoting prospects and families and small businesses to leave insurance for sharing, medical cost sharing, because it's just better. Unless you're sick, if you're sick, we have a pre-existing condition phase-in which case, despite opposing Obamacare, we now rely on it. With the caveat, as a policy guy, it's not that sick people didn't have options before Obamacare. It's a lie. Almost every state had what's called a higher risk pool. So taxpayers would subsidize insurance for the sick. Obamacare is just a variation of that, like Medicare Advantage. It's going to become a Medicare Advantage dynamic for blue collar workers, basically, and chronically diseased people. So it's going to become. And so it's good to have that safety net there for the sick. Go get your plan on the exchange using Health Sherpa. In my case, that's what I do. The problem is, no matter how good the insurance plan might be, they all have networks. Networks exclude the best doctors who don't want to accept the measly reimbursement offered by the insurer. So if you are sick using Obamacare, you're not going to get the doctor you want for cancer or heart disease. And I tell my prospects that. You probably don't want sharing because there's going to be a phase-in that could leave you pretty seriously exposed, but the Obamacare so-called safety net uses networks. So you're going to have to take sort of an HMO, a list of doctors. And if you go outside the network, you're going to have a surprise bill. So we're going to get into all that, Wiley, and the floor is yours to kind of expand on that, or tell us, what you do at HSA For America.
Okay. Well, what I thought I'd do is just tell our story. You asked me to kind of relate how we transformed from a agency focused just on health insurance to one that now a majority of our business is health sharing instead of health insurance. I've been at it a long time. So I started in 1987 in the health insurance business, and I was what they call a captive agent for a company that meant that I could only sell their plan. And I was, 23 years old when I started this. And I answered an ad that said, you can make $100,000 a year and set your own hours. And I thought, freedom for me. I can, make a lot of money and I'll be setting my own hours. And little did I know that those hours would be pretty much all my waking hours trying to make this business work. But it did. And it worked for about 10 years. And then in the later 90s, the plans that I was selling started having major rate increases. And it became difficult to enroll new clients because we weren't competitive anymore. And my existing clients were calling me distressed over what was going on, and there was nothing I could do because I had nothing else to sell them. And eventually it got to the point where I realized I can't do this. This is not a good business. It's I'm in a situation where I can't help my clients and they're in a bad situation. And so I quit. And I thought I was done with the insurance business. My wife and I took off and traveled for a year. And then we moved to Colorado to go back to grad school. So Fort Collins, Colorado State University is there. And I did get a master's degree in nutrition and exercise science. And at the same time, my wife, Christy, went to vet school. So nobody had a job. And we decided, well, the insurance business, maybe we can make a little side income doing that. But what I really wanted to do at the time was to give my clients more freedom of choice. And so I didn't want to go back to the situation I'd been in before, where I was tied down to just one company, and decided to broker and represented everybody I could find in Colorado, Blue Cross and whoever else there was. And that started working. And I had options to give people. And if they did get a rate increase, I could look and see if we could switch them to a different plan. And if just 2 or 3 years later, in 2004, HSAs became available. And I'll just give a little more detail in case anybody's not super familiar with how HSAs work. But basically, they allow you to put pre-tax money aside to cover future medical bills. And this is a whole nother level of healthcare freedom. When you have money in the bank that you can use to cover your medical bills, there's no HMO network on your money. You can spend it however and wherever you want. You can use it, of course, to pay for your deductibles and co-pays and co-insurance, but you can also use it to pay for alternative care or cutting edge longevity medicine that may not be covered by your insurance, or second and third opinions, or outside of network hospitals and doctors, or whatever you want. So it really expands your healthcare freedom. And as Charles was talking about earlier, if you don't use that money, it's always yours. And you can invest it if it's in a bank that allows you to do so. It grows tax deferred, just like an IRA. And if you withdraw that money to pay for a medical expense, the withdrawal is tax-free. So the things I liked about it, all of that, of course, and from a health policy perspective, the idea is to get the consumer more involved. So when they're spending their own money, they're more likely to try to compare prices and find the best value. It hasn't been as easy as we all hoped it would be, because hospitals hide their pricing. But it also, the other thing it does is it incentivizes the individual to have personal responsibility around their own health. Because if they do stay healthy and don't use that money, then it does just continue to grow. So HSAs, great thing, and was a really good move for us from an agency standpoint. We focused on HSAs, and that worked really well. And then, as we all know, in 2010, ObamaCare passed. In 2011, I think, if I'm remembering correctly, was the first year that it was active. Did have guaranteed issue. There was a shortened enrollment period, required benefits the plan had to cover. They basically kind of tried to force people to buy it, with a tax penalty in place for those who did not buy it. And they did this because a lot of people didn't want to buy it. And what really happened, though, it was the first time I realized that maybe the press wasn't giving us the whole story, because rates skyrocketed immediately and nobody talked about it. But they jumped, I don't recall exactly the percentages, probably 50% a year for several years in a row, just soaring premiums. Our clients, a whole lot of them were suffering tremendously. So we were once again looking for solutions. How can we find some relief for them? And one thing in the Affordable Care Act for this tax penalty and this requirement to carry health insurance, there was a little clause in the Affordable Care Act that said members of qualifying health sharing plans are not subject to the mandate and not subject to the penalty. So that certainly caught our eye, like health sharing plans. At the time, I had not heard about health sharing plans. And so we started looking into this idea. And it was probably 2016 or 2017 that we first started offering health sharing to our clients. And it proved to be popular right off the bat. The biggest reason was simply that the cost was reasonable. Stunning, really, to me, how much less expensive a health sharing membership is than health insurance. And we can, if you want, Charlie, get into talking about reasons why, but not only was it cheaper, most of the health sharing plans let people go to any doctor. Some of them would share for things like alternative care. And the general idea is that you're getting into associating with a group of like-minded people that maybe hopefully have better health habits. So a lot of attractive things there. And as you mentioned, Charlie, there's reasons people might not join a health share, might prefer health insurance also. But this really gave an option to the people who were really suffering from these high premiums. At this point, average, I looked this up a couple days ago. Let's see if I don't think I have the notes here, but I think the average family premium now is about $24,000 a year for those who don't receive a subsidy. Still stunning to me how much that is. Another mortgage payment, and even solidly middle class income families really struggle with that kind of monthly cost. So at this point, 90% approximately of those people who get a health insurance policy on the federal marketplace receive a subsidy. The people who don't receive a subsidy aren't buying health insurance to a large degree because of these outrageous costs. So now about 75% of our business has turned into health sharing. We still offer health insurance, but most of it is health sharing now. And we've also begun to get more and more small groups that are joining health sharing plans, which sometimes is a little complicated because of pre-existing conditions. There are also some of the health shares have religious components that can complicate things a little bit, but it's really opened the door for small companies with 10 or 15 employees to be able to offer something to their employees that can really help them out, health benefits. Gosh, if you're trying to offer health insurance to your small business employees and your average family premium is $22,000 a year and you've got 10 employees, that's a chunk of money. So we've been real excited to see how the reception we've gotten to marketing to small businesses and getting them interested in health sharing plans as well. Well, so I don't know, that's a pretty short story, but that's what brought us to this point. Just trying to help our clients achieve more healthcare freedom, which we now have health sharing plans, have a component that is HSA compatible, which gives them really the best of both worlds. They've got lower monthly costs, they've got the HSA that they can build up a fund in, and the freedom that brings them. So we're loving it. So Charlie, that's my story.
Fantastic. Let me start the questions, and folks in chat, you saw a couple things. One is if you have a question, just find the raise hand icon. Usually it's around the reactions tab or ... So somewhere around your Zoom controls. And then also the sharing HSA combo that Wiley sells, he sells other sharing plans too, is actually the sponsor for Freedom Hub. So enrollments in the sharing health savings account combo that Forbes featured, helps pay Freedom Hub's bill. So if you know any employer with 49 employees or less, it goes up that big. But as Wiley mentioned, if they're sick people, then we got to have them go on to the exchange, or they'll get stuck with networks. Let me share my screen here. We'll quick and show you an article about a congressman who has introduced a bill to require disclosure of health sharing reserves, the loss ratio, how much is paid out, and then some disclosures that we're not insurance, the things that we won't share in, illegal activities or immoral activities. And then here's the line I love the best from this guy that runs the Atheist Society. This guy Fish was concerned that the insurance agent offered sharing as a first resort over insurance. Well, Mr. Fish, I'm afraid you're going to be real disappointed because, Empowering Benefits Brokerage, our agency, is recruiting licensed health insurance agents every day because, sharing, especially Zion and Sedera, are the only things we're going to sell. Obamacare is a last resort. That's what it's going to become. It's going to become a Medicare Advantage network for middle-aged workers. So there's no turning back. And then in the link I put our this sharing Forbes combo was featured in Forbes, so you can see it there. Just click open the link and I'll stop share right there. Talk about that, Wiley, as you recruit agents to your agency. Your agency is called HSA For America, or what is the name of your agency?
Yeah, well, we still have Colo Health, which we started in Colorado way back 20 years ago, which is just focused in the state of Colorado. But our main brand is HSA For America. We're nationwide, and we started that strictly focused on HSA plans, but like I said, now things have shifted.
Yeah, and 30 million people have health savings accounts. So I always start with that version of our sharing, the one that combines with the sharing. Unfortunately, you have to have a self-employment source of income or license to qualify for it. It's a result of Obamacare, and I don't know. I think there's some serious bias among the cartel against health savings accounts because of that personal responsibility component. The cartel folks don't really want you to be personally responsible, because if you start looking for ways to save money, you educate yourself also on alternative health, and that leads you to become more healthy, and then you become a pretty poor customer of the health system. They want repeat business in chronic long-term users, maintenance meds. But talk about that as you recruit agents to your brokerage, your agency. Are they, saying, sharing is a pretty good option, not just the Obamacare plans? Is that a problem? I don't see that as a problem. Do you?
The last two of the last three agents that joined our agency were health sharing clients of ours. So they, already had seen the benefits, were thrilled with what they got, and wanted to be able to offer that to, themselves. So we still have them, get licensed and able to offer either route to our clients. But I think that just says a lot right there, that they were attracted because of what they had enrolled in. And as a matter of fact, I think both of them had the MPB HSA qualified secure plan.
Yeah, I mean, I'm recruiting agents all the time, and they pretty much stopped selling insurance.
Yeah.
I just refer folks to Health Sherpa for exchange plans if they need it. It's we pay pretty good commissions too, and you should be paid for doing good. I helped John Mackey form Conscious Capitalism, and the thing there was making money doing good. Why shouldn't you profit from saving the world?
It feels a lot better going through your day when you're really able to help people too.
I have another question, but I'll defer to Jim.
Well, actually, I just wanted to follow up, Charlie, on your point about once people become educated, they kind of start to opt out of the conventional healthcare system. I have a client, I'm a biofeedback practitioner as well, as you know. Someone the other day came in and she asked me, how often do you see a doctor? Like, well, when do you go to the doctor, Jim? And I said, I guess if I had an accident, I would see a doctor or something happened, but I haven't been, for a regular doctor unless I want to check my labs or do something in, I don't know, 5 years anyway. And I explain why. If you're going to get a physical once a year, well, that's just the physical. They're missing all of this information. And she's actually been on that path, starting to look at all of these alternatives. She found herself also a naturopathic doctor. And I said, all these people, know more than the traditional allopathic doctors. Now, that doesn't mean if you're in acute care, something's going on, yeah, you need that support. But for health, if you keep yourself healthy and you start to learn about this, right, you don't need to, and you have something like that cost sharing, you're in great shape.
Yeah, totally agree. Yeah, as Charlie said, I'm a big believer in the whole lifestyle approach, and I'm a big skeptic of a lot of the pharmaceutical approach, which seems to be what's driving healthcare these days.
Yeah, we know that. Actually, let me jump in. You said that because you were introduced as and you have your degree in nutrition. I'm really recommending intermittent fasting to clients, and really to focus on their nutrition. And I'd love to hear you talk about that a little bit.
I agree with you. Yeah, I agree with you. I do that every day. I go much of the day without eating. I think it's a great thing. You know, my background is I was involved with the paleo diet, and the concept there is just asking how did we evolve to eat, um, and the precept is that well, we were hunter gatherers for a couple million years until just 10,000 years ago. And that's when agriculture started, and we started eating grains and dairy and sugar and all of those things.
Mm.
And I'm with you. You know, if you really take your health seriously, I think a lot of people could go through life without really entering the medical system and the cholesterol medications and the antidepressants and all the stuff
Yeah.
that's going on, that people are you know, treated for a lifetime, but they're never cured.
So are you still eating paleo, or kind of a little
Yeah, I
different?
mean, I'm not religious about it, you know, but yes, that's how I eat. I eat fruits and vegetables and meat and fish, but not much bread or beer or
Stuff. Yeah.
dairy or modern foods. Yeah, processed modern foods. So it's not a complicated diet. It's just eating real food.
Thanks. Nina.
Hi, I have been on sharing ministry for 6 years. I've never used it, so I don't even know how it works in practical, but it's not HSA compliant. How did Zion and the others get HSA compliant, but not the one I'm with? I'm with Christian Healthcare Ministry.
Well, I can address that, and then Charlie, if you want to talk about it too. But basically, that plan, they have a minimum essential coverage health insurance, group health insurance policy that's a part of it. And this minimum essential coverage plan really just covers preventive care, but built into it is a high deductible. And the preventive care is covered prior to that high deductible. The only purpose of that deductible is to make it HSA qualified. So the people that join this plan, they're joining the health share, but they're also joining this self-funded small group, or the self-funded group MEC insurance policy. So it's actually an insurance plan that's covering the preventive care that makes it all HSA qualified. Does that make sense?
Kind of, sort of. Can I do a follow-up call with you later on, or with one of your colleagues to understand it more details? So I'm interested in moving on. I want an HSA. I'm desperate for an HSA.
Yeah, sure. HSAs are great. Charlie mentioned, you know, the possibility of accumulating $100,000 in your HSA. I've done that because I haven't used it very much, and whenever I've had an HSA plan, which has not been always, because a lot of times we've been covered under my wife's health insurance through her job. But whenever we have, we've maxed out the contribution, and it's great. It's great having that money there just to know if you ever need it.
Right.
So Nina, in chat is the sharing HSA combo featured in Forbes, and which sponsors Freedom Hub. So click that link and you'll get connected to me. I sell this stuff every day. That's how I make my money.
Okay.
And for those that have small businesses, I just enrolled a dozen people that work at a chiropractic office. So now they all have sharing in the small business. So whether you're individual, let me share my screen again and talk about the money doubling account. Wiley, what have you thought much about the HMA yet?
I'm not super familiar with the HMA, Charlie, but I'm interested in
Okay, let me real briefly, folks. This is the fastest growing account nationwide among licensed health insurance agents. And so what I sell to a lot of people are three things. The sharing, which cuts your major medical in half, so it's a no-brainer. The HSA, which is a tax shelter. You can set aside 3,500 individual, a little more than that, goes up with inflation, 7 grand by family every year. That rolls over every year. So multiply that by 10 years, 20 years, you've got your 100 grand for retirement when you need cash, because out-of-pocket exposure averages 200 grand for long-term care. And long-term care policies are really expensive. That's why life insurance folks have long-term care riders, and that's a pretty big business. So that if you are sick or you're going to have out-of-pocket, you're going to have a baby, braces, you want something for electives, for surgeries. This is a calculus based on what your expected out-of-pocket is going to be. So let's say you want a higher out-of-pocket sharing plan through Wiley's agents or myself, because that's cheaper. You know, the farther away you push sharing or insurance out of your personal life, the cheaper you're going to pay each month. The risk is, you know, the sharing or insurance isn't going to help you until 6 grand is your average deductible for insurance. And, you know, we could have as high as 5 grand for your IOA with us, in which case you want to have something else, a supplemental. And my friend John Goodman at Forbes featured the HMA as the best Medicare gap policy because it's a cash account. So it's got less limits and you could use it for a broader array of benefits, including dental. And old people use a lot of dental. So this is something you need to have, especially in retirement. It is the best Medicare gap policy. So if you want 10 grand in a prepaid Visa, it's going to cost you $140 a month over 3 years. It takes 3 years to double, which means you got to be patient. You can't use this thing in the first year. So don't use it. Otherwise, you're going to delay the doubling. After a year, it's only got 12% more than what you put in. So it's useless in the first year. After the second year, it's got about 28% more than what you put in, month 24. The value is $5,400. You paid $3,360. After 3 years, it's double. You paid 5 grand, it's worth 10 grand. The example here at the website that I'll put in chat is if you break your leg, you got a $4,600 out of pocket expense. That's going to bring your balance down to the level at month 24, which means it's only going to take you 12 months to double your money again, back to 10 grand. It's not your money. This is not an HSA. I love HSAs because it's your asset that you can bequeath to your heirs and use for a boat when you're old. This is a supplemental policy in cash. That hence my admonition to decide which account to buy based on your expected out-of-pocket. If you're going to risk 10 grand in out-of-pocket, cut it in half by paying $140 a month over 3 years. Once your balance is at 10 grand, then the monthly fee goes down to a maintenance level. So that's all this is. This is a supplemental policy in cash. That's just a better deal than a true supplemental insurance policy. So that's what this is. And I'll copy that and I'll stop sharing. But, you know, that's the mindset of the Wileys and myself and others in this world. Obamacare is a safety net for sick people. It's expensive. It needs subsidies. It still has huge deductibles and it has networks that exclude the best doctors. The sharing market is maturing. Now we have Zion. Now we have Sedera. I'm sure we'll have others in the future.
We do.
You know,
there's more and more coming. Yeah.
Yeah, talk about that maturity that's, you know, broadening the idea of sharing from just the religious origin now to secular and business.
Well, I think it's great. Yeah, I know there's now a health sharing organization that's specifically for the Jewish faith, and like you said, there are the secular ones that don't have any religious component, which is nice because not everybody necessarily agrees with some of the statements of faith of all the health sharing plans. And I think, Charlie, it's just a reflection of the ongoing growing market and a number of people who are saying this is a better option for them than health insurance.
Let me jump in a question. You talked about originally this started as a clause in Obamacare with these faith ministries, but now it's moving to secular, or at least non-religious groups are getting in. But doesn't the Obamacare clause require just for religious groups, or no?
Well, they, as I understand it, they require that the health sharing organization has been in existence since 1999. But it's at this point, I don't know that it's really relevant because there's no penalty that was removed a few years ago. So there's part of the law still says, yeah, you're required to buy a health insurance plan through the Affordable Care Act, but there's no penalty if you do not. And so the lack of penalty for health sharing members applies to anybody at this point, right?
If I can expand on that. So the secular plans aren't seeking compliance indirectly via the Obamacare exemption for those qualified religious plans. They just added the MEC that offers the required minimal essential coverage. It's about 60 screenings of your blood, plus mammograms, colonoscopies, and childhood shots. So for those 5 states where there is still a penalty on the state income tax, California, DC, New York, couple others, our secure plan is what you have to get because it's the only compliance one because of the MEC, the minimal essential coverage. And it's nice because it has, like Wiley said, that built-in deductible that allows for the HSA. So you get compliance, you get your annual screenings, which are expensive, and then you get the HSA. And by the way, it's a big ask for folks to go from insurance to sharing, but you are joining a community, and we expect you to be a little responsible and use our concierge to help you shop for cash-based colonoscopies and mammograms in standalone surgical centers, in these cash-based imaging centers. So that becomes a popular service, our concierge. They're fully staffed, busy as heck, helping folks find quality priced places to go for their specialist referrals. Now, do you find that, Wiley, with the concierge?
I think it's really great. I mentioned earlier one of the challenges that we all still have, if we have money in our HSA or HMA and want to go access medical care, it's still not easy to price shop and compare and find the best value. Hospitals are supposed to be showing all their pricing now, but most of them are ignoring that law and are not doing it yet. So yeah, I think concierge service is really great, just helping people find the best value.
Yeah, and if you have a sharing plan through Wiley or MPB, myself, our concierge is going to use Healthcare Blue Book. They're going to find you well-priced specialists. They'll use Prater to find you well-priced specialists. There are UberDoc is a new thing. Will get you a cash consult price with any specialist. On Freedom Hub over the years, you've met the other entrepreneurs discouraging bundle pricing. Savos, Wow, Fair Cost Market Plan, Misha. Wiley's right. Only 5% of the hospitals have complied with that rule to disclose their prices. Now, most hospitals and specialty places have a cash price, and will coach you to identify yourself just as a cash paying patient and then ask for a discount, get one. But it is intimidating to negotiate prices. Therefore, we don't ask you to do it. Just call our 800 number and our concierge will help you locate well-priced places for treatment. Nina has a question.
Very quickly, what is the deductible for the MEC plans?
no deductible on the mech.
I'm confused. I thought you said there has to be a deductible to be
Well,
HSA.
I'm sorry, no deductible for the preventive care, but the deductible never comes into play when using the mech. It's strictly there to make it HSA qualified. So
Oh,
maybe you know, I don't know exactly what the deductible is, but it's within the HSA qualified range.
Yeah, you know, it's a workaround, Nina. We wanted to offer an HSA plan with sharing. So the deductible is just there to comply with the law so you can have an HSA. And by the way, it offers the minimally required preventive screenings to make it compliant. So, you know, it's a mousetrap to achieve a lot of goals at once. For major medical, you're still going to use the sharing, not the mech. And the sharing, regardless of whether you combine it with an HSA or nothing, you know, the Care Plus plan is just sharing. It's really cheap for those on a budget. And by the way, there's a new sharing option that includes those free preventive screenings that are just offered through the sharing company. So for those who want the childhood shots, the mammogram and colonoscopy with the sharing, we offer that now. So we're constantly innovating, trying to meet consumer demand. But the deductible, we call it the initial unshared amount. The money that you have to pay before the sharing kicks in is always $1,000 or $2,500 or $5,000. And, you know, we try to encourage the lower IUA because, you know, what that means is the sharing company never will help you unless your sickness exceeds $1,000. And that can add up if you have urgent care, some prescriptions, some tests, or we encourage the HMA or HSA. So you have something to help you pay for out of pocket of the lower amount.
yeah, because Christian ministry is 500. That's the deductible for them.
Yeah, and we don't offer deductible that low. We start at 1,000, but you know they don't offer the HSA, and we do.
Right. Yeah.
And we also have the virtual DPC, so you can save money doing out of pocket that way, and or you can couple it with a DPC. You know, Wiley, what do you think about direct primary care practices? You know, it's an additional monthly subscription folks will pay, especially if a big family or chronically ill, pay $75 a month.
I love the whole DPC concept. I wasn't really even familiar with this until about a year ago, and really started looking into what is this all about. And we had our team sales meeting in Charleston, South Carolina a couple weeks ago, and had a DPC doctor come join us and just explain how his practice works and the whole concept of it. He charges, gosh, it was like $55 a month for a member to get all their direct primary care coverage. So their just sick doctor visits, their preventive care. Anytime they need to go to see the doctor about something, it was all included at that price. I think he's on the low end. I think $75 or $90 a month might be more common. But gosh, for a family with kids that are getting sick and all, not to have to meet any deductible, I think that's a great thing. The thing that he shared with us is that most of his members, and in his estimation, most members of DPC practices don't have insurance and don't have a health share, don't have anything beyond their DPC membership. So it's great that they have all their primary care covered. But if something happens and they end up in the hospital or needing to see a specialist, that DPC membership doesn't do them a lot of good. So yeah, we are now trying to work with DPC doctors to say, hey, your patients, if they don't have anything else other than your membership, they of course could buy health insurance. but maybe there's a lot less expensive route for them to go by getting a health sharing plan. And we offer a health sharing plan, you do too, Charlie, that is specifically designed to work with DPC memberships. So the health sharing does not share for those primary care visits that are already covered by that membership, but is there really to protect against the things that the DPC membership won't cover. So yeah, I think it's a great thing, and it's my study of it. It appears that that model is growing rapidly, and a lot of people are joining DPCs.
And that direct plan that Wiley is mentioning that combines with the DPC does actually now have free preventive screenings, and not all the ones required for compliance. So it's not a compliant plan, but it has the biggies. You know, what DPCs really like are the colonoscopy, mammogram, and childhood shots. And there's also one doctor visit, whether for wellness, sickness, specialty. So that's every year. So the DPC docs like that. And then, you know, we haven't really been explicit, Wiley, about the cost of sharing. You mentioned $24K a year for insurance. I think on average, I usually say $200, $250 a month per head on average. I'm not sure what number you would use. You're the finance undergrad, not me. And, you know, it's a little more for a family, but give or take.
Yeah, it kind of amazes me how much less expensive health shares are able to do this than health insurance. And I certainly don't know the finance end of that, but I assume it's based on the health of the people that are attracted to health share plans. And I assume it's, you know, getting out of the insurance PPO whole thing with hidden prices and all of that, and getting people who really know how to negotiate prices, know what they should be, know what a reasonable amount that should be paid for those services, as opposed to the insurance PPO HMO network system. What do you think?
Well, I think the pre-existing condition phase in, where any condition in your medical records for the past 2 years will not be shared in the first year with us. Then there's 25K second year, 50K third year, and 125K every year thereafter. You know, people self-select out of that. If you just had cancer or heart disease, you know, we're going to be honest with you. You will not be happy if there's no sharing for your sickness the first year with us, because, you know, Zion found in your medical records, you know, the doctor discussed with you a symptom. So, you know, we have to have that sober conversation with you about the pre-ex. That's the mainly it. And then, of course, they're very good at negotiating with hospitals if they're trying to rip you off. You know, in a couple of months, they give you the cash after that. And then with Healthcare Blue Book, what's really nice is, you know, not a stick but a carrot. Zion will pay the providers directly if you let us use Healthcare Blue Book to find you a well-priced provider, and we'll cut your out-of-pocket by a few $100s. And that's a red, orange, green light system. And, you know, that system, that rating company can save you a heartache if you think you're going to a good doctor who's got a red rating on readmission to the hospital. So it's not just about price, it's about quality too. And with that, there's a pre-arranged bundle price paid immediately, you know, once the appointment is finished. So that's going to help save money. It's always, you know, once we get the bundle prices in the market, which is the next big change in healthcare, that's going to bring prices down even more. And as people use HMAs more for out-of-pocket, up to $5 grand and 10 grand, pushing sharing even farther out to just cover catastrophic, that's going to bring prices down even more. And as folks learn about nutrition and personal responsibility and behavior, you know, what percentage of chronic disease is reversible? 80%, you know?
Or preventable, even more.
Yeah. Lou, you have your hand up? We have time for one more question.
Sure. So I'm one of those newbies on the team, on Wiley's team, and I started out as a member of a health share before I went to work as an advisor. But my question is, the Planston, it's $3,000 deductible for an individual and $6,000 for a family. And that's on the not on the preventive, obviously. And then I've been talking almost weekly to people who are gun shy on health shares because of an experience that they or somebody they know has had with Liberty. And there's other companies out there that really haven't performed like they should have, or in some cases aren't even around anymore. And so they're concerned, what could happen? I mean, that when they sign off on the guidelines, it says it's not insurance and there's no contract. So my question is, and I'm asking you this, Charles, because I know that you've been at this for a while, but if Zion would fail, would Planston's deductible then come to the rescue and so they'd have something in place if there was a catastrophic kind of an event?
While you can build on my answer, any plan can fail, any insurance plan can fail. And insurance guarantees no more payment than sharing, by the way. That's a myth. Look at the fine print. What happened to Liberty was they grew too fast and they reimbursed too low. So they were busy paying bills in the back office and just got backed up. So some bills took 6 months to pay. Some bills never got paid, and it was a disaster. I think what Zion and Sedera did to avoid that mistake was, having higher out-of-pocket limits, not 500, but 1,000 or even up to 5,000. And then encouraging folks to use HSAs or HMAs for lower level out-of-pocket. So the sharing gets less and less burdens with lower level bills. That's what happened with Liberty. And its reputation, all the advisors on LinkedIn that work with self-funded big groups, they all recommend just two companies, Sedera and Zion. Those are the two secular companies. Those are the two sharing companies that deal with groups. I don't sell any other sharing company. So, it's just about good business and using tools to make sure that you don't have those problems. I have hardly any complaints with, my complaints are with the MEC, because people are trying to find doctors on the network. That's the only portion of sharing that uses the network. It's just how to find a doctor to give you your free wellness visit. And then what happens is the doctor upsells you in the visit. Oh, guess what, Lou? We're finding a little symptom here. Let's run a test for that. Well, that's not preventive. That's diagnostic. That's not free. You got to pay for that. And then the patient is calling a concierge. What happened? I thought this was free. The 60 required screenings are free to make this compliant. So the complaints aren't happening with the sharing companies we use. And that's why you should use a brokerage like Wiley's brokerage or ours, because we're vetting the sharing companies. We're not going to use a Liberty. We're not going to use any of the other sharing companies. Wiley uses a few. We use only two. And we're going to keep it that way because we get good results. My cousin died of cancer a couple years ago on Sedera, and I had firsthand experience with his cousin, a lawyer who sues doctors. My cousin, his brother who sues doctors, going, this is a change. It's not adversarial. They partner with you in choosing therapies when you have cancer. They pay everything. It's a great experience for major medical. I won't sell insurance. They have networks. They exclude the best doctors. What good is it? I'm going to refer you to Health Sherpa. It's easy. I went through it yesterday. It recommended to me an HMO plan, an HMO with a narrow, skinny network with doctors I wouldn't go to if I had cancer or heart attack. So, some folks will find any excuse not to switch over. They're going to be stuck with networks. They're going to be stuck with $6,000 average deductibles. That's the insurance world. If they're not willing to drink the water that we lead them to, some prospects won't bite, or they might next year. I have a lot of folks that, come back later out of desperation. But, Wiley, why don't you take it from here? And
Yeah, so to get more specific, Lou, no, I don't think that $6,000 or $3,000 deductible, other than making it HSA qualified, will come into play, because that MEC is only there to cover those preventive benefits. So, I guess if the health share were to go bankrupt or something, somebody would just have to switch to a different health share or to health insurance if it was open enrollment. But yeah, I'm not concerned about that. We've gotten virtually, like you said, Charlie, virtually no complaints from our members on this. So knock on wood, but it's nice not having to to deal with that kind of thing. And it's also, I think, due to the service the concierge people and just the service team provides when people do need a sharing.
Lou, does that answer your question?
Yes, it does. I didn't want to, offer that Planston as a backup plan without getting some more information about it. But that question has come up a few times about the stability of the health share world in general, not particularly any single organization. And I think that's prompted from the Liberty situation that's going on now.
Yeah, because they had a lot of members.
Yeah, and then the other company, Alira in Trinity, that went bankrupt was only because of government assault. They were targeted as the scapegoat for any other problem with sharing, and they couldn't handle the legal costs, and they had to end. So it can't happen. Wiley, why don't you kind of give us your closing thoughts and how folks can reach you?
Well, you can reach us at www.hsaforamerica.com. My closing thoughts, Charlie, I'm just really honored that you had me on here. I love all the information you guys share. There needs to be more and more innovation in this area. I see the more government gets involved, the higher the costs go, which is not surprising, because when you can charge the government versus charging an individual, the individual is going to look at the price and go, is this worth it? And the government's probably not going to. And we see that in drug costs and hospital costs and all kinds of medical care. So we need innovation. We need people looking for alternative solutions. And I'm glad you guys are out there sharing all this information.